What's going on out there? It's February 16th. I'm Frank Curzio, it's the Wall Street Unplugged podcast, where I break the headlines and... Tell you what's really moving these markets. It's Thursday. A lot going on. Markets coming down, PPI numbers, and bringing in Daniel Creech to discuss this as well.
Hello,
Have
Frank.
some fun with this. What's going on, man? How you doing?
Wednesdays going into Thursdays. I like this.
I know. This is awesome. We're on the Wall Street Unplugged Premium, which is coming out not next week, the week after. So everything you're going to get now is for free. You're going to have one free podcast. It's going to be about 20 minutes, but that is coming out 2 weeks from now, so March 1st, where a lot of this is going to be behind a paywall for $10 a month, and we're going to include lots of stuff and picks and newsletters behind it and provide tons of value for you guys. But it's nice to have you back in the studio for 2 days in a row, man.
I know.
It's awesome.
It's a streak. We're like a country song. We're
I know.
one in a row. Now we're on to two.
I haven't seen anyone complain. No emails. What's your email?
Yeah, they probably didn't listen to yesterday's. Daniel at CurzioResearch.com. They're probably delayed, Frank.
They might
We're coming up to a long weekend, too. I didn't even realize that. Do you know the markets are closed Monday?
I only know because my kids told me a million times because
Nice.
they have off. So and that's it. Sometimes you're like, yeah, you have a, but then you realize, oh my god, my kid's gonna be home every second of the day.
Yeah. I get the
Which is
memo.
cool.
We're not closed here. We'll be here working.
Which is awesome. That might sound bad that I just said, but it's awesome. But it's just, yeah, with everything going on with my house and hectic and nonsense and stuff. So gives a few more days to pack and try to get out of here in a couple of weeks in my new house. But let's go over today. The market's coming down. We're doing this, after the market opened. And it's coming down because we just saw another bad inflation number, right? Which is the producer price index wholesales. This is interesting, Daniel. Okay, because I want you to hear me out because I want to go over this timeline, and this timeline isn't even a year. You know, some other people have timelines of 20, whatever. This is I'm talking about since February 2nd. February 2nd, last Fed meeting, Powell purposely used the word disinflation. Remember how many times?
11?
I think it was 11 times to explain how inflation's coming down.
You're talking about literally a couple weeks ago, this month, February.
Yeah, this month, February.
Okay.
February 2nd, right? So this is like, we're February 16th.
Yeah, gotcha.
Right? So, again, disinflation on purpose made sure he purposely used that word, even though it just means inflation. It's not, deflation or anything. It's inflation is coming down, which we all knew inflation is coming down. It was coming down, pretty quick. And all of a sudden, we're getting this news out. But then on February 7th, he had that event in Washington, which, you kind of ripped him for because you thought it was, joking around a lot.
Oh, yeah, it was lackadaisical.
Like
It was terrible.
It was broadcasted live on every single financial news channel. And he used the word disinflation again. Saying inflation's coming down. His tone, his language, speaking, literal language, and his body language resulted in this, bullish sentiment. And people were thinking, hey, it looks like inflation's going to come down. We're not going to see a recession. The Fed's going to stop raising rates pretty soon. And it's likely the Fed's going to cut later this year. That was the sentiment. Remember, we're talking about February 2nd and February 7th. It's February 16th right now, okay? So a little more than a week later, we just saw a CPI number come out hotter than expected. No matter how you break it down, it's the core, right, which excludes food and energy, which I get. But now they have the super core, which excludes food, energy, and services, the super core. So I'm waiting for them, Daniel, to do the super duper call, CPI, which will include every single thing consumers spend money on. They'll say, oh, it's not being raised based on if you eliminate every single thing in the index. Because the super core is funny. I'd be honest with you, that's new to me. But now it's, super core. Then we saw retail sales come out a couple days ago, right? And come out red hot. I mean, that was red hot. Where we saw prices surge in almost everything. Food, services, and drinking places were 7.2%. 7.2% rose. Motor vehicles, parts was 5.9%. Remember all those used cars and stuff coming in? No longer. Furniture rose 4.4%. Electronics and appliance went up 3.5%. I'm not cherry picking here. Almost every single thing in that index went up, right? Online retail sales up. And up faster, right? Because you could argue, well, it's still coming down. They thought it was going to come down a lot faster. You have U.S. storage prices still climbing up 10% from last year. Rentals have bottomed. Last month they started to tick higher again. And then what do we have today? And this is an index that's widely used because this is on a wholesale level. And if you're seeing prices come down a lot quicker, then it should filter out to other suppliers, which is why Walmart's telling us supplies enough if you want to sell your stuff in our stores, which whatever it is, 100,000 retailers, you're going to sell stuff in our stores, you better stop raising prices because we're not going to use you. That's what they actually said to their suppliers. So the PPI is widely looked at, right, from the wholesale level. And this was much, much, much hotter than expected, almost double, right? They're expecting a 0.4% increase. We got a 0.7% increase, which is why stocks are selling off today as we're taping this. again, you could say wholesale prices over the past 12 months, Daniel, that they're slowing still. You could be, oh, they're still slow. They're still up 6% year over year. That's 3 times higher than the Fed target. All right. So I'm not sure if you guys are paying attention at home. I am. I don't know if you saw the mortgage rates and how much they've gone up incredibly in the past.
They went above 6 again, right?
Yeah, I think it's 6.5. Not only did they go up, they were below 5, and they're 6 point. That's a major move, right? A major move. The 10-year yield is rising sharply. The 6-month T-bill surged over 5%. The last time we saw that happen, Daniel, listen, mid-2007 and October 2000. Think about those time periods. Just ahead of 30% plus declines in the market. And by the way, the Fed was lowering rates back then, not raising while shrinking its balance sheet, which is QT, which they're doing right now at the same time. The 2-year is up 60 basis points. Sometimes people like basis points and don't know what that means. Again, I like to put things in perspective to let, to keep everyone know what's going on here. This is in the last 2 weeks, right? That's how much. That's a monster move. Now, more important, when you see a divergence like that between the 2-year surging by that amount, right? And then we have equities, and we're looking at equities, right? When you see a divergence like this, right? Again, between 2-year and how much that has moved, you usually see, historically, we've seen the NASDAQ pull back between 5 and 10% in the past. Yet, stocks are going up. And you might be asking why I'm using NASDAQ, because the most risky stocks usually get smashed when rates start to surge, and they're surging again, right? So the bond market is telling you that the Fed's not even close to being done. It's telling you that don't even think about it. There's basically a 0 chance unless we get this massive recession and huge, just sell off and everything. But there's 0 chance that they're going to lower at the end of the year, right? So it takes away those bullish claims. And even yesterday alone, the index of the most heavily shorted stocks was up 4% on the day. So it's what's going on right now. We usually see the exact opposite. We usually see risky stocks sell off incredibly when we see interest rates go higher. But when you're looking at that inflation data, and remember, this comes alongside where we just had a terrible earnings season. We're going to be declining 2.2% around year over year. And then next year, it's come down so much, we're going to see close to a 5% decline in earnings. I think that's going to be more like 20%. There's a lot of stuff out there that's a major disconnect that should be worrying you. And the numbers are starting to confirm it. So, for me, when I look at this and people are like, well, the trend is your friend that's high. You're right. It is. It is higher. You could point to technicals. But eventually, this is going to come. We're going to come down pretty hard.
Come home to roost. But yeah, this is going to come. We're looking at a very, very hard landing now because we're seeing the data move in the wrong direction. The bond market's telling the Fed that, hey, you know what? You're not even done. But the fact that Powell 2 weeks ago, less than 2 weeks ago, and even a week ago was just, smiling and disinflation coming down, and 3 straight indicators a week later, like it wasn't just like these small increases. This is across the board. You're seeing inflation. It's coming down very, very slow, much slower than they thought it was coming down, especially in the past months. And now you're seeing it where used car prices starting to go up. You're seeing rentals start to tick up again. We're starting to see upticks in a lot of this stuff. And that's not good if you think the Fed is done raising rates. No, and I continue to, shocked or surprised isn't the correct word here. You reference Powell's latest speeches, the Fed meeting and then the interview. In his Q&A on February 2nd, he literally said, if I'm not mistaken, that they're not raising or cutting rates this year. He doesn't see that. Nobody at the Fed sees that. Mm-hmm. And yet, if you turn on financial media, which we're a part of, you hear a lot on CNBC and everybody else saying, oh, yeah, but the market still believes this. And to your point, if you just try to step back for a moment and think through, and again, here's the answer of how to handle this. You just really know what you own and own quality and protect yourself. That's too easy of an answer. When you know what you own and you look at this big picture, to your point, hey, prices don't have to follow what they did historically, but you do want to take that as a data point to think, hey, what's the risk reward? And we were joking about earlier on CNBC and Santelli and them guys joking this morning about how everything's efficient and, hey, whatever the price is, that's the accurate price. I couldn't disagree with that. There's no way I could disagree with that more. Yeah. Yet, I don't know what the market is listening to Powell and saying. They must fear either China closing down. I don't know, and I admit I'm sorry, I don't know what would cause a sudden drop of the hat, snap of the fingers, terrible recession, or outside of some huge major event like war or some terrible event. I just don't see how demand falls off a cliff overnight. And I think that that's what basically is needed in order to get these rate cuts anytime soon. You can still be long and participate everything. Again, you don't have to have a crystal market of knowing where it's going. Just know the odds aren't in your favor of the next move to be 25% higher than lower. And that's okay.
I think there's a sentiment out there, and we're long in all our portfolios, right? We've been calling and saying, listen, this is a good shot this market come down a lot, but we've been very selective in the stocks we pick and doing very, very well as the market goes higher, right? While protecting ourselves and almost beating the major indices, which is something that, again, I highlight my mistakes all the time, something I'm very proud of because I know that my subscribers are doing well, right? Because we're able to protect ourselves, and fine, you might be losing money temporarily because you bought long-dated puts, which, are out of the money right now, maybe worthless right now, but they're long-dated. But you protect yourself while still participating, and that's what you need to do, even more now than ever. But when I see a market like this and why it's different is, from my experience doing this, Daniel, 30 years, you brought up a good point. It's the biggest market collapses come on kind of black swan events, like the credit crisis. Nobody knew the full extent. And they thought they had to control it. They didn't know AIG was insuring everybody, and AIG was going to go under, and then all investment banks were done and everyone was over leveraged, right? We didn't know to the extent until well into 2008, right? Even though the foundation started cracking in 2007. You have COVID, right? Nobody models for 90% revenue declines where you have total lockdowns and shutdowns, right? And the government just...
I was going to say, you don't factor in a authoritarian government.
Yeah, that they're going to spend and hand checks and hand money to everyone, even the people that don't need it. When you got guys like Harvard and major schools with massive, multi-billion-dollar endowments, like applying for loans and stuff and free money from the government. That's just, listen, they're doing it because they're giving away money for free, and they're going to line up for it. Everybody is. Even the rich going to line up probably more than the poor when that happens. With this is different. I feel like it's like a 2000 to 2002 type market where, slowly it's just this drain, and you have like these reins that are constantly going to be holding you back every time you get forward. It's going to pull you back. It's going to continue to pull you back where it's almost impossible to get traction on this. And you see the market trying to get traction. You see a lot of the riskiest assets go higher, but now, you could say, well, I think we're going to control inflation. I think we're going to be perfectly fine. The Fed's fighting a battle it can't win. I think people need to realize that. There's absolutely no way. There's no way that we're not going to go in recession and that you're going to control inflation. Okay. You're either going to crash the market in a recession. It's the only way to deal with this type of inflation. We've seen that in the 80s in a playbook. And we know that they're going to be serious and adamant about not reversing costs and reversing policy from tightening to easing anytime soon, because it was the biggest mistake, arguably, in the history of the Fed, which is well documented. Recessions aren't documented. You can't, I'll ask you, when's the last 5 recessions? Most people might be able to name 2 of them, but they're not really too sure. I mean, It's not like, I know who's the Fed governor, or the Fed chair, you're not going to be able to name. It's not a big deal. Recessions happen. They happen every 6 years on average, usually. But that is well documented about the mistakes that were made. And I know that Powell, his history, his legacy, he's not going to do that. So if you think that they're going to lower rates at the end of this year, I mean, I thought I was crazy even before these numbers came out. But these numbers, this isn't like, oh, it's a blip, right? Oh, well, this reading because of this, because of, holiday sales, or because of the weather, because you're seeing all these numbers, okay? And when you start saying things like weather and things like, be very, very careful. Just be very careful, because right now you're seeing spending. You're seeing it. If you are listening to this podcast, forget about what you listen on TV. Forget about what those economists who are filthy rich listen to, because all they do is lock themselves in rooms and look at charts. They don't look at real world stuff. Are you paying more than you've ever paid right now for most of your bills? And the answer is yes. You're not seeing inflation come down. Nobody's seeing inflation come down. If you go into a restaurant, you're not like, holy shit, that bill I only paid $70, and that bill was $90 last month. There's not one person that's saying that. There's not one person. You get the fluctuation in energy prices here and there. They're up year over year, but maybe down whatever period. Again, over the year, you could say they're down from their highs, but they're still up incredibly over the last year. And again, there's manipulation there, which is done by every president into an election cycle. I'm just surprised that they're still doing it, right? Which is drain the strategic reserves. And they're still doing it, right? They're still doing it because Russia now you have this geopolitical risk, which we're not even talking about when it comes to Russia, when it comes to China. Threats being thrown back and forth right now. I mean, it's pretty hot. So when I see a market like this, it's not like a catalyst, like, wow, stock's going to, I just think it's going to be a long haul of downward pressure, constant downward pressure. Listen, the bond market's telling you that. It's going to be ugly, right? That's why rates are going back up. The biggest companies in the world are telling you that as well. They're telling you the same exact thing. They're not balls-to-the-wall spending. They're cutting R&D. They're cutting the advertising budget. They're cutting all the spending across the board. They're laying off employees, right? That's how they're being estimates. They're not being estimates because we're seeing massive demand. Holy cow. Some companies are. Some companies. The majority, including the large tech companies, are laying off employees right now. So when I see a market like this, I see like through, maybe 12, 18, 24 months of just a painful market where you're not going to see the major catalyst and a 10% decline in a day, a 50% decline in a day. But what you're seeing right now with the bond market is telling you that the Fed's not even close. They're not even close to stopping that tightening policy, right? They're going to continue to tighten. And I wouldn't be surprised if we see more data come out, especially over the next few weeks, showing that inflation is actually starting to tick higher. I said this a month and a half ago. I was surprised because Muhammad Al-Arian, who I like a lot, said the same thing. The Fed should have raised by 50 basis points at 25 basis points. Just get it done. I think we're going to see another 50 basis point hike. Okay. And that's not even being priced into the market right now. But based on these numbers, it changes the entire outlook where the terminal rate was 4.7. That's the highest it was going to be. It was like 4.7, I think it's 4.8 because we're at 4.75. And I think it was, what is it? Between 4.5, 4.75, right? So it was 4.8, I think. So they thought a lot that we were done seeing rate hikes. Now it's like 5.3.
Yeah.
We're talking about in a few weeks. That's how high it's gone up. So that's going to be the terminal rate. The rate that we're going to peak at, that will likely stay there probably for 9 to 12 months and staying at those levels, which is insane when you think about it, considering how low we were a year ago. When I see these conditions, just protect yourself. We can go higher. Maybe, this is a market where the NASDAQ doubled in 1999 when everyone thought it was going to crash completely. The whole entire year, it doubled. It went up, and then you saw the 70% collapse over the next 2.5 years. Okay, I'm not saying that stock's going to collapse 70%. Okay, you got better balance sheets. You have a Fed that's on your side. If we're seeing it come down, they're going to probably inject capital into whatever. But a 20, 30% retesting the lows, I know a lot of people have that sentiment and believe that's going to happen, and they use that against you, saying, well, most people believe that. It's not true. The sentiment indicators, the bull bear indicators, a lot of these indicators are showing that, the lowest levels of people thinking that, just the optimism is more higher than it's been since 2 years, right? When I track this stuff. So just don't think, well, everybody believes that, so it's not going to happen. Just because the data showing that's going to happen doesn't mean it's not going to happen. It could just happen longer than expected, but just protect yourself, because what's going on right now is someone who studied the market for 30 years. It's one of the most dangerous markets that I've seen. And now the bond market is just flashing the red signals that rates are likely to go high and the Fed's going to continue on its tightening policy a lot longer than people are expecting.
And some of this, to me, just proves how emotional money is. And a lot of people disagree with that. I know this from conversations in the insurance world and all that kind of stuff. And again, I would disagree with that. You notice Powell talks an awful lot about consumer sentiment and feeling, even their feelings towards inflation. If they think inflation is going to continue going higher, it will go higher. We need to get them out of that mindset and things. That's kind of what I'll be looking for to read between the lines coming up from him. And if you think, Frank and Daniel are crazy, you're pointing out all these negatives, but prices continue to go higher. Overall, things are a lot better. People feel good about things. Well, one reason of that is that prices have been moving higher. And when prices are moving higher, you naturally get more bullish. That's just the way it is. Mm-hmm. Vice versa, when prices are falling, nobody comes to your door and nobody buys newsletters going, boy, this has got to be a great time. Mm-hmm. You get more bearish with that.
Yeah.
The other thing is, remember, there's still a lot of money in the economy sloshing around. We've talked about this fun stat that, COVID relief money and stimulus money peaked around a little over $2 trillion. Some banks have said that would last in consumers' pockets until the end of this year, maybe October-ish. Some have moved that up to, say, the summertime now. The point is, regardless of when that is drained, it will be drained at some point. But that helps influence data from now until then. Think about that. If you still have excess cash and excess savings, which they do, people do, everybody does to a certain extent, that's going to continue to just kind of murky the waters of all this silliness. Speaking of emotions, can we transform to the 99-year-old emotional, angry, China-loving person against crypto?
You see in Bitcoin along with risky assets, but Bitcoin is really surging. It's yes. Real. Everyone's like, it's going to, people call it zero. It's so funny. The asset prices was it closing on 25,000, 24.5 now. It was 15,000 around the low and stuff, but it's up incredibly since then. And they had Munger on, and let me see if I can quote him here. What did he say? An absolute horror. Ashamed of my country. can't believe government allowed this to exist. Well, they didn't really have a choice, right? I mean, they could have tried to shut it down. They just didn't really.
Too bad we already gave this away, but until this point, it could be a fun game. You don't know what he's talking about there. It could be anything. It could be alcohol. It could be gambling. It could be crypto. But
that's what he said, gambling, right? He said it's gambling. It's stupid. And yet, what did Becky Quick say about gambling?
Well, it was, she asked him, this was with the Daily, the company he's part of, Daily, the reason he was talking and taking questions, Daily, the paper, I think.
I don't know.
Okay. Well, anyway.
I didn't see the interview. I just saw the quotes on it,
and
I'm laughing because every time you see
Daily something,
and they're going to ask about crypto because that's going to give them the best quotes,
exactly,
and give them the best headlines, right? So that's what seems.
Yes, and he mentioned, it's just like gambling, or it's a bad way to gamble, and then Becky was mentioning that she was asking him about other gambling, and he doesn't have near as a problem as that. It's just this. I've said this in the past. This just proves, and I really respect Charlie Munger. He is one of the smartest investors. Him and Warren Buffett are the tag team, of course, of capitalism. This absolutely proves that when you're rich, people just assume you're smart across all segments and every aspect of the economy.
Daily Journal, by the way.
Daily Journal. Mm-hmm. Charlie Munger is fantastic. However, he is bought and paid for like every other corporate wimp out there in brand that has to bend the knee to China and just is all about money. And that's okay. I'm not saying that he's a bad person for that. I'm just simply saying that, listen, we're all hypocrites. Doc Holliday said it best. My hypocrisy only goes so far when he saved Wyatt Earp's ass in Tombstone. The point is that he's got, and I don't mind this, but the way he praises one of the greatest capitalist teams ever to generate massive wealth, billions of dollars, build Berkshire Hathaway, turns around and praises the most terrible communist, cutthroat, thumb, foot on your head type government, tells them to ban everything. Look at how they control their citizens. He's in favor of this. Now, of course, you can say that from behind the wall of capitalism, because guess what? If your name is Jack Ma and you do that crap over in China, what do?
Disappear.
You take a vacation for a long time. Or if you're in Saudi Arabia and you're an uncle of the new prince over there that likes to throw crap around, guess what? You lose a bunch of weight and you stay at the Ritz-Carlton. Now, you might be... Now, there's allegations you might get stripped and, hung upside down and beat. Who knows? My point is that this is the biggest hypocrisy, and it's just hilarious. You just ought to ignore this guy. You ought to absolutely do the exact opposite of what he's talking about here with crypto. If Charlie Munger, every time he comes out, you ought to buy a little bit more allocation to Bitcoin and Ethereum.
And we'll get to crypto in a second, but you bring up a good point, because I think people in America really don't understand. Most people in America don't understand. I'm sure most people haven't traveled outside the country and realize how great this country is, but... think about your government, and you try to go right now. You have all your money in your bank, whatever, in your brokerage firms, and say if the government shuts it off and says you have no more access to the money, right? And you have to pay your bills and you can't. What are you going to do? Who are you going to call? You can call a lawyer. You can't fight the government. The government could be like, F you.
Call Charlie.
Right? I mean, just think about that. Like in China, if you speak out against the government, I mean, there's... You see it, right? I mean, this is something that you fear for your life. So you have to be very careful. I don't care how rich you are. You have to play by the rules. We're not used to that here. And, of course, we have our politicians shouting at the top, both of them, yelling at the tech companies for different reasons of why they're the assholes of the world, why oil companies are assholes for generating so many profits. And, hey, we should be taxing them. Why? So we get to spend more of your money. Our politicians, they're going to make more money. And that's so they can give it back to people who are less fortunate, which is distribution of wealth, which has never worked in the history of any government, any country in the history of the world. But there's a reason why they do this. They're calling them out. Why? Because it results in more lobbying dollars. It results in more campaign funding, right, from these companies, which fund. There's a reason why. Think about it. Someone shouting at you, telling you that we're going to regulate the crap out of your company. What are you going to do? Right? If your government is telling you that, you're going to donate a lot of money. It's a reason why they're the largest donors, right? It's pretty obvious. So this whole game that's being played out there, it filters into Bitcoin, right? Because you could say, well, Bitcoin's going up because all risky assets are going up. I think it's a lot more than that. And yes, it could contribute to a little bit of this move, but what we saw last year with the bankruptcies and fraud, which shouldn't be limited to say FTX is crypto, that's actual fraud. Okay, when you have a firm that has assets, other people's assets on a platform that you're taking and putting them into a hedge fund and nobody knows about, that's fraud. Okay, that's to do with an asshole.
stealing.
You could say it's in the crypto industry, but it's like saying that the whole utility industry after Enron is horrible.
Bernie Madoff did not mean that Wall Street is uninvestable.
Yeah. So a lot of that happened. But if you're looking at Bitcoin and the case to own Bitcoin, just look at what's going on in Washington. Okay, it's incredible. Look at them trying to fight this thing. Look at the news, right? Over the past month is insane when you really look at the news and what's going on. I mean, just now you're trying to go after out of everything. Out of every single thing, you're going after stable coins. Stable coins, which are like money market accounts. You're going after that, right? Because if you remove that, you're going to hurt crypto. Now you're seeing Binance announce that, hey, you know what? They have Binance US, but the other Binance, we're not accepting money from US investors anymore. Kraken just got fined. You're seeing all these, yet Bitcoin continues to go higher. And when you look at what's happening and you look at, even the whole debt ceiling, right? So the debt ceiling is just it's all political nonsense. Why haven't we heard in a while? Because the Democrats controlled every single branch, right? So it doesn't matter they're passing everything. It doesn't matter what you say.
Well, and it doesn't, the real nervousness isn't for another month or two. I mean, they don't have to do it tomorrow. That's why they're still kicking it.
It's going to happen, I believe, in the summer. However, and I don't know if people know this, but we did actually reach those limits, right? So we reached those limits. And this was in January, right? And then Yellen came out and said, hey, you know what? Again, we've actually turned out that we hit these limits, the debt ceiling, we reached that current debt limit, and then we had to take extraordinary measures, right, to allow the government to continue borrowing to meet its obligations and stuff. So now we have debt ceiling coming up, and we go back to the Trump era, and there's the back and forth, but we even go back to when the Democrats with the Obama era, and this is where it started, because Obama actually conceded a little bit and said, okay, we're not going to spend as much on certain things, and whether it was, it was reform of Social Security, Medicare, Medicaid, and he never got forgiven for that, right? So you're going to see all this nonsense going on right now for the Democrats to be like, all right, we have to pass this, right? It doesn't matter what side you're on. If you think they should pass, if you think that they're going to concede, it's all about them getting more money on both sides and how are they going to benefit themselves in order to get all the votes to pass this, right? And they're going to threaten the end of the United States. No one's going to get paid, and it's going to be, default, and U.S. is going to default. It's a massive deal. It's going to go on for a couple of months, and that's going to be a headwind. It's been a headwind almost all the time when we see this happen during the debt ceiling. But the bottom line is, when you're looking at the debt ceiling, this is a reason why to own Bitcoin, because Congress has voted to increase the debt limit, and this is over the past 25 years, right? We're supposed to worry about this and say, okay, we want to lower our debt. The past 25 years, they increased it more than a dozen times. Okay, so every single government, every central bank, they're going to spend as much money as they can because there's no repercussions. There's no checks and balances. They don't care, right? It's just spend. Who cares? It's more money for them in their pocket, right? So a lot of people disagree. You're supposed to be representing your constituents. They don't. Right. So it's like to keep raising, just raise no matter what, keep spending no matter what. That's why it's always good to have a government that's split, no matter what side are you on. Now it's split. It's good that they're having these talks, but to see all the bullshit around the debt limit and people being worried now when this has been going on for decades, and they raised the debt limit more than a dozen times the past 25 years. What are you going to think is going to happen next 25 years? Constant spending, which is why you're seeing Bitcoin become more of a religion to people. And the fact that these people are still in Bitcoin and people who haven't sold it, if you didn't sell it last year, which is the worst environment I've seen for a sector, maybe in my life, for one particular sector, a reason to totally get out of it and be like, holy cow, no. And now you're seeing this thing rise and come back. If you didn't sell it then, please tell me, frankcurzioresearch.com, email me, what is going to make you sell Bitcoin going forward? Like, if you didn't sell it then, what could possibly happen? Yes, you're seeing limits in the U.S. I think the more the U.S. tries to stop this or put curbs around it, the stronger the case gets for this to exist. Yeah. Where this is how people move money in and out of countries. It's going to exist. It's how Russia's using it when you close the SWIFT system. This is for them. And it's here. It's not going away. But just to see it rise in an environment like this and go through everything that they went through is really, really incredible. It really is when I see it. So, the Bitcoin move to me, it is surprising that it hasn't stayed lower, that it's coming back. But I just don't know who will be selling this and what kind of, what black swan event or what event's going to make you sell Bitcoin if you haven't sold it already after all the negative news and bankruptcies and all the shit you went through last year. And I just don't see it. I don't know.
I agree. That's a good point. I look for some emails. I would like to know about that as well. Maybe they're just buy it and forget about it if it goes to a certain price level, whatever. That will be interesting. Quickly, on the front page of the Wall Street Journal today, the SEC moves to tighten rules for advisors handling crypto. The long and short of this article is that crypto firms are going to have to get more licenses, jump through more hoops, basically be treated more like banks. Kraken, the big takeaway there was, listen, the more you see the revolving door or the game plan of typical Wall Street, and what I mean by that is that when you're a bank, you can pay fines, admit to no wrongdoing, and continue business as normal. You rinse and repeat. Now Kraken, they had to stop their earning programs where they give interest on stuff. However, they paid a fine. They're not being shut down. There was rumors out there this morning in articles about Binance is preparing, hey, we're going to pay fines and then we're going to move on. Coinbase, they're still doing staking and things like that. They're trying to talk with the SEC. If you think that they're going to shut down Coinbase and delist it and make it go to zero, I just agree to disagree. I think that there will be huge fines paid. There'll be a lot of jargoning back and forth. To keep this is extremely simple, and I know I'm onto something right here because it pisses everybody off that's so damn smart, Frank. The idea that your average person isn't going to find value, we can debate about what number that is, what value that is. You don't think that the average person, to your great point about what's going on in politics now and has been forever and will continue to do so for the future as long as we're here, if you don't think that a finite, fixed amount of something like Bitcoin only having 21 million, if you don't think that that resonates with the individual, then tell me how something goes from zero to $24,000 in 10 years, and then it's just a scam and for drug dealers and all this. Real quick, Charlie Munger was answering a question. Becky Quick talked about this, and somebody set him up and said, listen, when you gave a speech back at this, whatever, college ceremony, you mentioned you should never talk about something unless you have a better counter argument. So if you're going to say, hey, I don't like XYZ, be prepared to say that.
Of course.
And he asked Charlie, hey, give me your other argument about Bitcoin or crypto. And he simply said, and I'm paraphrasing here, but he simply said, listen, there isn't another good argument. I think they're all idiots. That is by definition, meaning, hey, I'm just old and rich and I just have a stance and I'm right and you're wrong. That's okay, but don't take his advice on that. That just proves that you have no leg to stand on. And the idea that not everybody, but a lot of government and higher up officials tell you that Bitcoin is only for drug dealers. It's not about freedom. It's not about limit. It's not about value. It's not about personal responsibility. They're telling you exactly what they're afraid of. And the whole notion, one last thing here, the greatest thing about crypto is freedom and responsibility. The worst thing about blockchain will be central bank digital currencies, CBDC. That does not stand for Central Bank Daniel Creech. Central bank digital currencies will be the absolute. That will lead to one of the biggest uprising and either civil wars or huge wars over the next decade, in my opinion. That's going to be terrible because, for the one important reason, when you're on a central bank digital currency, you can say something that the government doesn't like, you can dress a certain way, you can call somebody a certain name, and they will shut you off electronically and you will not be able to function. That's a sad situation. So between now and then, make a shit ton of money and be free and keep the wolf away from the door as long as possible.
You can't shut down really banks, but I tell you what they're doing is they're trying to. Because and thank you, a good friend of mine, Chang, sent me this. I'm just going to point this out really quick. Okay, so December 7th, Signature, which is one of the most active banks serving crypto clients, announced that it intends to halve deposits subscribed to crypto clients, give the customers their money back, then shut down their accounts, drawing its crypto deposits down from 23 billion to 10 billion. Right, so and it's going to exit stablecoin business. This from government stuff, right? So January 3rd, the Fed, FDIC, and OCC released a joint statement on the risk to banks engaging with crypto, telling banks, listen, don't if you hold crypto, watch out, okay? Because strongly discouraging you from doing so based on safety and soundness. So telling the banks, right, not to, enough with the crypto. A giant metropolitan commercial bank with a few banks that serve crypto clients announces a total shutdown of crypto asset related verticals. So you see it from the government, right? Then on the 9th, Silvergate, stock crashes 1611.55. You're seeing this. Again, everyone's saying it's fraud. You have short sellers. I haven't seen any fraud yet. Just people removing assets from the platform because they're worried about the FTX situation and maybe my assets on that platform. Maybe if they shut down, I'm not going to get them back. You're looking at January 21st. Again, this is just recent. Binance announces due to this policy at Signature Bank, they will only process user fiat transactions more than 100,000. January 27th, Federal Reserve denies crypto bank custodians 2-year application become a member of the Federal Reserve System, citing safety and soundness risks. Again, Custodia is a very big platform for crypto and banks. Kansas City branch denied Custodia's application for a massive account, for the master account for cryptos. That was on the 27th. But, I can keep going here. Like, you're just seeing the banks put pressure on. I'm seeing it with one company that I'm involved with in crypto asking me and say, Frank, we're starting a U.S. operations. We thought it would be okay to start U.S. operations. And they're basically a software company that has a token, but which trades and they do it, overseas and stuff like that. But now they're expanding and they're opening U.S. down. And the fact that they're opening it up in the U.S., they want to have U.S. operations where they could pay people fiat, right? So it's kind of like a subsidiary. They went to Bank of America, which is a bank that I use. I think it's the most shittiest bank ever. I bet you had experiences like that with other banks as well. It's just amazing that the 6-month T-bills and things like that are 5%. And they're not going to pay you shit on your accounts until you call them. That's a bank for you. When they're trying to open an account, they were able to open it, deposit it with hundreds of thousands of dollars, and they said, no. We just did some research on you and found out like the background that you are, crypto related, crypto company, even though they're a huge company generating revenue, doing fine. And they asked me, they're like, Frank, do you know any banks that are going to that we could do this with? And for me, we opened up a Coinbase, and Coinbase put us through the ringer. We're a US based company. We're not technically a crypto company, but we do have crypto assets, right? One of our biggest assets is real estate in TCG world. Yeah, which is, one of our largest purchases a company's ever made, $5 million. And they're having trouble, right? So I think this is extremely bullish for Bitcoin, but there is, especially over the past month and a half, 2 months, it's not regulating this stuff and saying this is what we need to see. It's like, hey, you better be careful because if you accept this shit, there's a good likelihood that we're going to come after you. And now Kraken just paid a big fee, right? You're seeing all these big fees. You see T0 pay a fee. All these guys are just like, all right, SEC's cracking down. Let's pay the fees and then adjust. But it's funny how the SEC is going after crypto from the banking point of view right now. And let's see how that turns out. It's going to result in maybe less crypto, but it's going to put the U.S. at a significant disadvantage because crypto is the future. This is where they're going. This is the younger generation. This is the millennial generation, the Gen Z. This is where they're going, okay? This is what they're doing. NFT volume is exploding. They talk about NFTs are all into crypto. And the fact that you're not regulating it and saying, hey, if you're going to accept this is what you have to do. You're telling them, hey, you're not even giving them rules. We're just saying, hey, it's probably a good idea that you stop what you're doing right now because it's likely that we're going to come after you. So a bank is going, okay, let's get out of it. And you saw it clearly with Bank of America, which is a company that I deal with, which is amazing. I think that's a bullish case. It's going to make it an even more bullish case because when you're looking at Bitcoin, it's anti-government. They hate the government, and that's going to continue. And now the government's realizing that, holy shit, this is bigger than we ever thought it would be. It's going to get bigger and bigger. They thought it was going to dial down. But the fact, just the last month and a half, Daniel, that they're going after all this stuff now is sad.
Yeah.
You just fucking regulate it. Like, regulate the fucking business. Just
say,
all right, this is what we need. This is what I need to see. I like what you said about the ETFs. When SEC chair came out and said, look, there's clear guidelines of how we're going to accept an ETF. If you follow them, we have thousands of securities that trade. But if you're not going to follow them, that's fine. Or at least you're providing that framework. Provide the framework, man. You had years and years and years. You still don't know what you're doing. Hester Pierce is one of the biggest names in the SEC. I interviewed her personally. She's pro-crypto. She came out against the SEC and said, listen, I really, basically, these guys have no idea what the hell they're doing. They don't know anything about crypto. They don't want to learn about it. But it is the future. Embrace it. But the fact that they're going after the banks recently over the past 2 months is pretty crazy. So let's see how this turns out. And it's interesting that Bitcoin continues to go high because you're going to strengthen it. It's like telling your daughter, right? She's making a huge mistake by dating this guy. And if you say that, she's going to date him forever and ever and ever and ever and ever until 10 years she realizes, wow, I should have listened, right? Yeah. Anyway, maybe not the best example, but the more you say no to something, the more it's going to get bigger and bigger and bigger, especially in Bitcoin. It is huge. It's a religion to these people. They haven't sold it through one of the worst years ever. I don't know. But to see it where it is very interesting, and I think it's still going to go a lot higher.
I agree. Yeah, I mean, I have nothing to add to that other than profanity and silliness. So this is a family show, Frank. Let's wrap it up.
No, but Munger, you know what? I respect Munger. You're 99. Say what you want. Do what you want. And that's cool. And he's just against it. That's fine. Okay.
Yeah, I don't care about it. Yeah, it's fine.
It's people agree with it, don't agree with it. I know a lot of billionaire hedge funds that said the same thing. And when they learned about it, they quickly said, okay, you know what? I do get it. I didn't get it at first, but now I get it. So it is interesting, but sometimes I promise myself as I get older, I'll never get that way where I refuse to learn something else or hear someone else's opinion if it's totally different than mine. That's just the way I am. So I'm always going to be willing to change because I've seen people, especially men, as they get older, they just set in their ways. They'll never change. And I never want to be that person that never, ever changes because the world is ever going to change. It's going to get, innovations are going to be constant innovations going forward. And I want to be part of that, even when I'm 60, 70, and 80. Now I'm 50, but I understand why he's saying that. I get it, but it doesn't mean that I agree with it. But it is kind of funny and entertaining. I love having it on. Because why? Because it provides great headlines. So, Daniel, any last words before we go?
Nope. Daniel at CurzioResearch.com. I'll beat you to it.
You're jumping ahead of the gun. Come on, man. You're killing me.
It's like I know the cue.
Any questions or comments, Frank, CurzioResearch.com. And this Thursday podcast, we're going to have one more of these. And then again, a lot of this stuff's going to be behind our paywall, Wall Street Unplugged Premium. It's going to be awesome, providing ideas, more research, more details. As you can see, the last two podcasts were about 40 minutes long. We just try to keep them to 30. You're going to see much more time allocated to ideas and things like that in Wall Street Unplugged Premium, which we are going to launch on the 1st. And then you can see Daniel do a portfolio update for Dollar Stock Club, which we're taking every week. We're going to have a trading idea that we talk about. It's in the news that we're going to throw in that portfolio. And every 2 weeks, Daniel's going to be doing, unfortunately, I think, a video update on the portfolio. But no, in all seriousness, it's really cool. So you're going to see him break down some of these things, what to do, and all these trades. And it is a trading portfolio, something that we don't have in our stable right now. So we're really, really excited to have an actual trading portfolio of ideas that we're going to be providing. So questions, comments, free to email, frankcurzioresearch.com. Thank you so much. And I'll see you guys next week. Take care.